Brandon Leigh is here now with more on the challenges of doing business in the UK. Brandon, good to see you. Just how have you managed to increase your revenue and your profit in these very difficult times, notably for retailers?
Sure. No, for us it's having a strategy across both developed markets and emerging markets. We have about 30–40% of our business in developed markets, the balance in emerging markets. And for us, it's having a strategy that's quite flexible across the group. So,
well, that's really the key, because consumers here in Britain especially are suffering.
Sure.
We've got inflation really eroding people's incomes to buy these products that we see behind you. Saint-Tropez, the self-tanning range, for one.
Yeah. No, well, and what we've done effectively in the UK, recognising that the consumer disposable income is being reduced, is look at our business in two different ways, really. We have a core washing and bathing business, which is the Imperial Leather, Carex Original Source brands, recognising that price points for those products are being curtailed at sort of £1–1.50, and really tailoring products to meet those price points. Having lots of new products coming out, consumers like new news.
So you're keeping your prices low, but that squeezes margins.
Margins are being impacted particularly by the rise in raw material costs. Fortunately for us in the UK, we have a very efficient manufacturing facility, so we make in the UK for the UK, keeps our transport costs down, so that helps. The other part of our UK business is our new beauty division, and that's probably less affected by the consumer downturn, actually. This lipstick effect of people wanting to feel good, look good in a difficult environment.
Cheap pick-me-up, like a tube of lipstick. Now, you're also taking this control over your manufacturing to a whole nother level. Last year, you completed a stake in a palm oil refinery. What do you guys know about palm oil, other than buying it for your products?
Sure.
That's an interesting move, isn't it?
The starting point for us on that is looking at our Nigerian business, which is very broad. We're in HPC products. We have an electricals goods business there. But if you look at Nigeria as an economy, the biggest parts of that economy going forward in terms of growth will be food. Looking at food, one of the biggest components of food will be edible oils and food ingredients. So this business here, it's about launching into the consumer branded space in terms of food ingredients, and what we've done to secure the cost and quality of the oil that needs to go into these products is we've formed a joint venture with Wilmar to build a very large refinery in Nigeria. It will be the largest refinery in that market, and that will help us.
And so that organic growth strategy is just how important for you going forward. What else are you doing? Where else are you looking around the globe?
The biggest, probably one of our other big markets that's important to us is Indonesia. So this is looking to capitalise on the growth that's coming in Asia. Indonesia, 240 million people, tough terrain to do business in. We've been there a long time. We have a leading position actually in baby care. We have about 40% share of the baby care market in Indonesia, and that actually grew fastest for us as a market in the last year.
And is the strategy organic, as Owen says, or are you going to be looking to do more acquisitions and grow that way?
Yeah, sure. Yeah, it's a mix, really. It's a mix. So we've done acquisitions over the last few years. We've bought Charles Worthington, the Sanctuary, Saint-Tropez, but we'll also do joint ventures, and we're also looking for strong organic growth.
OK, Brandon Leigh from PZ Cussons, British company, right? Thank you very much indeed for joining us
Nice
here on Bloomberg.